There's a lot of noise in the crypto sphere and very little signal. We're here to amplify that signal. My name is Nicholas Merton, and you're listening to The AMP, powered by Digivox.
What's going on, everyone? My name is Nicholas Merton, and we here on the Digivox podcast have a really special guest here today following our recent conversation with Mayor Francis Suarez. I've got a longtime friend of mine in the cryptocurrency industry, and that is no other than Dr. Chris Kacher, one of the co-founders of Virtue of Self-Investing, and has worked under some of the major trading giants who have brought in some of the best recording returns in history in traditional equity markets. We met back a couple years ago, and it's so nice to yet again be catching up with you, Chris. Chris, how you doing, man?
Great to be here.
Awesome, man. So I want to go ahead and just kind of dive into the thick of it because I know we've talked a lot over the past couple of years about crypto markets. You know, what I always love coming back to when we get to chat, Chris, is that I think back to 2018 when we met in like the late winter when Bitcoin was down in the depths of 3,000 to 4,000. No one was talking about crypto. I think we were at that Estonian conference and there was like 80 to 100 people attending. And here you were, one of the few people who had one of the interesting presentations at the conference talking about some of the parabolic price action we could see over the coming years for Bitcoin and listing out those targets that people talk about now, 100K, 200K, even more than that. So I want to just get your feeling for where things are. Like, where are we at in the cycle? Is the cycle over right now? I'd heard that you made some pretty big moves as recent.
Right. You know, it brings to mind what you just commented back in 2013. You thought 2018 was slow. You should try 2013 in London, of all cities. And meetings with Vitalik Buterin numbered maybe a handful, maybe a couple dozen people. That was it. And, then 2018, Estonian, very forward thinking. It was a good conference. Met Richard Hart, met a number of good, notable people who've become friends of mine to this day. And I really enjoyed the talk I was able to give because at that time, most people were not following metrics, blockchain, on-chain metrics, things like that. And I've used metrics to guide my market exposure over the years since 2013. So that's why it's no coincidence that I went to cash in 2014, went to cash in January of 2018, and then didn't really do much for the next, probably 12 to 14, next 12 to 14 months, basically. Just didn't trade much. There wasn't much to do. You could have shorted and made money, but the shorting platforms were, let's say, quite sketchy in those years. Now we can short with confidence. So that's great. I think we are potentially going into a situation with major headwinds because the Fed, for the first time, has switched its posture from dovish to hawkish. Powell removed the word transitory, and then he gave a lot of clues saying, inflation's out of hand. It's not what I thought it was. I didn't think, he was originally saying inflation was going to go away after a few months, but now he's changed his view. And obviously it's clear to everybody, the world, that inflation is out of control. A number of major central banks have had to tighten by 25 basis points. Powell is doing his $30 billion a month tapering program so that by March, there's going to be no more money being printed, and then that gives him room to tighten. And the futures, the CME Fed futures markets already pricing in the odds of the first rate hike in May. I think they're pricing in a 67% odds that's going to happen. Now markets don't like this. The punch bowl is being taken away. Every time in the last decade that Powell tightens the balance sheet, markets stage either a taper tantrum or they just go into full-blown correction. And if you look at the S&P 500 and NASDAQ, every time they stage about a 20% correction off peak, Powell cries uncle. Powell comes, or the Fed chair, whoever that is, they come in and they say, you know what? We're going to have to reverse our decision to tighten. We're going to have to loosen again. We're going to have to print more. And I think that that is the uncle point once again. Right now, major averages are only basically 3 to 6% off their peak in the U.S. markets. 20% is a long way down from there, especially when you factor in all the stocks that are overinflated in terms of their PEs, which are way out of control because of QE. Quantitative easing has helped a lot of these assets reach way overvalued levels. So those stocks are all vulnerable. If and when, I think it's not a question of if, it's a question of when these major averages will hit that minus 20% mark. This is what they do. The only time they didn't do that is during COVID. That's a black swan environment. They corrected way more than 20%. And what did Powell do? He immediately came on and said, okay, we're going to start printing. We got to start printing by the trillions. And the last 12 months of money printing in the US is greater than all the other years combined. M2, that is the money supply. M2 never contracts, especially when debt gets to these levels. We are at the largest levels of debt. The US actually recently exceeded even the debt levels of World War II. Interest rates are at 5,000-year lows. I mean, everything is so stretched, it boggles the mind. And if you actually look at the Fed funds rate, which is at 0 to 0.25%, it's been at 0 to 0.25% for a long time. And you look at inflation as measured by the CPI being the government manipulated number. You know, when things in the basket start to go up too much, they get removed. So it doesn't represent real inflation. And nevertheless, that CPI number is massive. I mean, it's out of control. And if you look at it relative to the Fed funds rate, there has never been in history such a massive difference between Fed funds rate and where the CPI is at. Therefore, the Fed has no choice but to tighten. And when that happens, the markets are going to undergo a correction. People have said on some of my broadcasts, well, what if Powell wants to be the hero and pull Paul Volcker? Paul Volcker in the early 80s, he hiked rates up to unprecedented high level. We had the highest rates on record in the early 80s. Now, times are vastly different. He had the headroom to do that. And therefore, what happened? We did not get the mother of all crashes. We got a plain Jane bear market where the major averages corrected about a third, 33%, 35% off their peak. And everything was normalized. And that set the stage for a great bull market, the roaring 80s, fantastic decade for stocks, except for, 1987. This time around, we are at such onerous levels of debt. The yield curve is already flattening. Powell does not have room to hike. Maybe he'll get away with one rate hike. But we're not in 2017, rather 2018. Both of those years, actually, he was hiking Fed funds and discount rate, got hiked several times. He had the room to do that, and markets did not crash. This time, I don't believe he's got that headroom at all. And anyway, the beauty of price volume action is I don't have to be right. All I have to know is what is the market telling me on a day-to-day basis. So once markets start to undergo major corrections, and it looks like we're undergoing one right now, that I'll know what to do. And I mean, I'm gonna be watching and waiting for Powell to indicate that he's at the uncle point, and he's got to now reverse his tapering decision or hiking decision.
So to take a step back, Chris, to give people a bit of context and color on it, it seems like your focus right now is not so much on, whether or not there's institutional interest in Bitcoin or Ethereum or other crypto assets or other buyers. It's a mere macro perspective. And to take it even further back, as you were mentioning, what we've got is a really interesting situation where since back in the 1980s, again, since the Volcker period, we've been on a continuous decline in interest rates back down to those historic lows, which again makes the cost of credit excessively easy for institutions to get access to, for making it incredibly cheap to borrow capital. And outside of that as well, you've got quantitative easing. And we even talked about it back, I think it was in 2018, 2019, when I had you on the Data Dash podcast that we had. And we were talking about this idea how all of these central banks, the Federal Reserve, which prints money in the United States, the European Central Bank or ECB, the Bank of Japan, the Bank of England, all of them are printing money. And the crazy thing is that these are going onto the balance sheets of banks. And the problem is that it's not always going directly into loans or credit facilitation in the economy, but it's going to asset markets, and it can move anywhere at once. And we've been seeing the US stock market being the biggest beneficiary of all this easy credit and capital, where Apple is now at a $3 trillion market cap. You've got tech stocks at bloated price to earnings ratios. To put that in simple terms, meaning that the stock value is so much higher per the amount of actual revenue, sales growth, profit making potential of the company. And now we're at this point where interest rates are breakneck zero, basically. The Fed has already been printing historic amounts of money. And then finally, whereas it didn't have this issue the past couple of years because a lot of the money being created wasn't entering into the actual real economy, now because of the excessive printing that we've had, we are now seeing real inflation. The CPI manipulation, all the data metric things that you could do to kind of calm the nerves of everyday citizens, it's becoming apparent. There's supply shortages in the economy. You're seeing I mean, I think, for example, my friend, for example, he likes Gatorade, right? He drinks it on a normal basis. And he was saying that an average pack of Gatorade was like going from $3.99 now to $8.99. So it's more than doubled in price. And I think these kind of telltale signs are pointing towards what you're saying, Chris, which is that right now in the economy, the Fed may be on its last opportunity, if not the last opportunity, to even try providing stimulus to the economy, coming back yet again to please the financial markets, which really are separate in a lot of ways from the actual physical everyday economy. The financial markets have been really propped up by this era of quantitative easing, and now we might be entering into an era of quantitative tightening. That's, if I'm getting it right, that's the general premise you're putting out, right?
Absolutely. I mean, metrics have their place, but ultimately, I do believe that the saying "don't fight the Fed" is very true. Yeah. It's true with stocks. I think it's even more true with crypto. We saw what happened in 2018. There was all this hopium going on every time Bitcoin would correct. You know, it was down 50%, then it was down 66%, then it was down 75%. And by the way, just for non-mathematicians, the difference between 75% and 90% is massive. It's not 15%. If you're down 75%, you need a four-fold gain. If you're down 90%, you need a 10-fold gain to get back to break even. Yeah. So, you know, back then, Bitcoin, I think, corrected 87% off peak in 2018. And that's disaster. I mean, Ethereum was off 95%. Yeah. That means you need a 20-fold gain
to get back to square one
from those levels, get back to even. Yeah. And then if that's not to say what, you know, also the altcoins, Ethereum was the number one performer. So the altcoins got devastated to the tune of 98, 99%, or didn't even come back. Yeah. So crypto is, I always say, rocket fuel, and you have to know how to handle it properly. And the market does give windows of opportunity. I've identified through a confluence of strategies that I use to identify major open windows in crypto. I've done this with stocks. I've been KPMG audited. The returns that everyone said was impossible, well, they've been proven out by a Big Four auditor over several years. We also did an in-house audit on my crypto trading because no Big Four auditor will touch crypto. They're not, because regulations are not in place. They cannot actually take the risk to properly audit any crypto account. So the way I did it was what the way a Grayscale did. You do your in-house audit and you submit your tax returns. Then no one can contest the results. And what I found in my trading is, yes, 2018 was a great year for me. I was up double digits. The average crypto hedge fund, was down 54%, according to PricewaterhouseCoopers. It's no mistake. I mean, 2014, same thing. There's not much to do when you got so many headwinds. The headwinds from 2018 were Fed-induced because they were tightening. And finally, in December, Christmas crashed, December 24th. We had the first Christmas crash on record in stocks. Crypto had already been yanked down hugely. And then Powell comes on, emergency. We're going to not tighten the balance sheets anymore. That's the first thing he said. The second thing he said was on January 4th, where he said we're going to start printing more money again. And of course, December 24th was the stock market low. Everything went straight up from there. Crypto wasn't quite as dramatic, but that was a significant low for Bitcoin. I think that was the low. Yeah, Bitcoin hit the low late December 2018, mm-hmm. And then it kind of went back and filled for the next few months, and then we issued a formal buy signal on March 1st of 2019.
Yeah. And shortly after, on April 1st, I remember I was actually in Amsterdam in the Netherlands at that time doing a meetup in the crypto space. It felt like a ghost town, trying to meet people who wanted to talk about crypto. And then out of nowhere, I happened to be visiting at the Amsterdam Stock Exchange, and that morning Bitcoin had popped up, I think, like 15-20% out of nowhere. You know, and it was incredible because that was the first catalyst sign that, wow, we actually might have just had our bottom back a couple of weeks or months ago. So, but I want to kind of dive into this point, Chris, that you were talking about earlier. So one thing I think that's important for people to understand is that you're a trader in this case. You were talking about the returns you made earlier. I think it's awesome that you went through and doing the audits and everything related to those returns and your background and stuff. I think you've had wonderful education, worked with some really great people in the traditional markets. But I wanted to spend some time to maybe think about like getting a perspective for like the everyday person. So you're someone who's in like knees deep into the markets. Like, you know, we're constantly watching crypto markets throughout our day-to-day basis. A lot of people listening in might be more kind of everyday investors. It's not something to be ashamed of by any means, but just someone who's not consumed entirely by crypto or the financial space. With the Fed talking the way that it is right now, it sounds like you're on the idea that we could be entering into kind of a dull period for assets. What does to you does it seem like an okay idea for people to be able to dollar cost average into their favorite cryptocurrencies, into other assets like equities, into other commodities, maybe like gold and silver? I'm curious what your take is for someone who's maybe more passive. Should they hold off or should they get into it still?
I think DCA is great
Mhm.
because if you take like, well, take my parents for instance. I told them, take the money you can afford to lose. I always tell that's the first rule of investing. Never invest what you can't afford to lose. So, and then I said, put half in Bitcoin, put half in Ethereum. I think Ethereum is going to beat Bitcoin. It always does. If you're more aggressive, put 2/3 in Ethereum, 1/3 in Bitcoin. And then as you go along, regardless of where they are in price, add to your position. That, that's an informal dollar cost averaging. Formal would be every month you take a little bit out of your paycheck or wherever, your savings, and you buy Bitcoin and Ethereum every month. And you do this. If you do this over over every cycle, you're going to be up huge because your average cost. Say if you did this let's say you started doing this in January 2018. Hopefully you wouldn't have. And I was telling everyone I have my big sell signal that came on January 30th of 2018, and I went mostly to cash. And I told everyone this is the first time I've had a major sell signal. The metrics are screwed up. Everything looks pretty bad. We've had a major climax stop. This is my exit point. Everything said exit. Um, However, if you started dollar cost averaging at the beginning of 2018, your average cost would be somewhere down the middle. I mean, Bitcoin lost 80 some percent, 87%, but your average cost would be somewhere where Bitcoin is, say, off 40 some percent, whatever, 50%. And then by 2020, I mean, you'd be well up on your position, and you just keep doing this. It's a great practice because let's go back to basic principles. Basic principle is Bitcoin is hard money. It is store of value. That's the killer app. It's not going to go away. It's decentralized. It's the internet's DNA. No government can get rid of this. Yes, they can slow it down. Yes, they can try to ban it. But what we've seen in the past is Bitcoin has knee-jerk reactions lower. That's a great point to add to the position. And then ultimately, it always reaches new highs. Bitcoin has corrected 94% twice in its history. I think the first was in 2010 and then again in 2011. Despite these massive corrections it's had, what is it? That site 99 Bitcoin says Bitcoin has died close to 500 times now based on mainstream media analysis. And yet a dollar in 2010 today would be worth something like $6 million. There's nothing in the history of speculation that even comes close. And Bitcoin, I mean, I was to give this keynote to the mayor of Geneva and all these CEOs of banks in 2017. And I had a slide on there, and it's still in cyberspace. I had this slide on there that said Bitcoin by to $1 million by the end of 2023. I still stand by that prediction. I think I'll be off by a factor or two. I think it'll get to 500,000 somewhere by that point. But ultimately, the bigger picture is, where is it going to be 10 years from now?
Yeah.
Easily in the millions, easily. And I think, the thing is, for someone who wants to be on the conservative side and just buy one coin and don't look at it for the next 5 years, 10 years, that's Bitcoin. Ethereum, I love the bits. That's more horsepower. However, it does have competition from other layer ones. I think it's going to win. It's got the network effect. But you never know. A lot of things can change in the space. I think another way to strategize is to say put half in Bitcoin and then put the other half across top coins like Ethereum, Solana, maybe Luna, and maybe one gaming coin as well. Top end NFT metaversal gaming coin like Sandbox.
Right.
Those would be my favorites. And then you just let it sit. I think Sandbox has already been up huge, but the metaverse, and as relates to NFTs, the guy who bought Beeple for 69 million. He was saying on an interview, he believes that the NFT space is going to tower over all the other spaces combined in crypto. That includes DeFi, that includes DEXs, all of that. I agree with that because NFTs revolutionize private ownership. They are also decentralized. They are away from government control for the most part. I mean, unless you design it in a way that is DeFi related, yeah, then of course it becomes a security and then it has to be regulated. But for the most part, no one can really control the trading of NFTs and also the groups that form around them. Right. And I think they're going to be, well, they're already, we're only in the first inning of NFTs right now, and we're going to get to a point where I think it's going to become like Discord channels. I don't know how many hundreds of thousands of Discord channels are, but people can be their avatar. They can be their alter ego. They can role play. They can be a part of the metaverse through Discord. But Discord, I think, will then eventually transform into a form of NFTs and metaversal platforms that people then can live their virtual life in full, because people are already doing that.
I'm curious to ask you about that, Chris, because a funny point you brought up earlier and stuff is about that $1 million price target for Bitcoin. And it sounds, back in 2018, I remember from the presentation you were talking about that really high level. Back then we would have been seen as crazy, and as you mentioned, we might just be off by a factor of 1 or 2 multiples. From basically that range of somewhere around 200. 200,000 by this cycle, 250K, whatever the level might be. Either way, no matter where Bitcoin's going, it's always interesting to think about the next trend that could come up. And you were bringing up this topic of NFTs and the metaverse. I think this has been, as it is one of the newer trends in the crypto space, it's not so much a controversial one, but one where you get people who are on either end of the spectrum who really feel like, this topic that's been around since the 90s, really, this idea of a virtual space where we can communicate, we can socialize, free ideas can be exchanged. You can really do anything and be anything in the metaverse, similar to Ready Player One, all the kind of movies that people use as analogies. I'm curious to ask you this, do you think the metaverse is here within the next couple of years? And it might be that this might be kind of a broad question, but what does the metaverse look like to you, in the long term? And do you think that the market opportunity is right here, right now, or are we having our .com bubble kind of wave of speculation around what the metaverse really is going to be?
Okay, metaverse is all the metaverse is it really was born with the birth of the PC. Right. That would be 1980, 1981. I was part of that. I know exactly what it's like. You form bonds that are just as deep as in-person bonds. You might not know, you usually wouldn't know what the person looked like. You just know what they sound like, and you're texting back and forth to them. And maybe, you're trading software, maybe you're programming, maybe you're running a bulletin board system. You're doing things, but this is a very elite group that existed in the sense that, most of us were teens, but there were very few of us, but we existed around the United States. And this was an early version of the metaverse. Now, of course, with broadband and with all the gaming platforms, the metaverse in its earliest incarnation has vastly expanded to where the average Generation Zer right now is very much part of that, where they have their headset on and their screen is divided up into 9 different people, and they're chatting and they're gaming, multiple screens. And that's their world, which is my world back when I was a teen to quite an extent. So I can relate to why that has swept so many people. And going forward, it's going to continue to grow. I think more and more people are going to, of all ages, not just teens, but all ages, are going to become a part of this, because it's not just for games. It's also for economies, like Axie Infinity has proven. So many people in the Philippines have quit their day jobs to become professional Axie Infinity players because they can make more playing the game than at their normal jobs. And that's true for any third world country or any developing country, but it's also true for first world nations. If you can supplement your income, if you can generate a second income stream or third income stream from home by playing games, of course you're going to do that because you're going to have fun. Yeah. And some of these, obviously, Axie Infinity is the first to do this P2E concept, and there's so many new competitors that are launching as well, that are going to probably have as good, if not better, product, and they're going to in turn attract a lot of eyeballs. So I think the valuation of the gaming NFT space, where it sits right now, if you go say one whole cycle ahead. Let's say we get through this tightening phase and we go back to one of those windows of opportunity. That window of opportunity, I'm going to be focused on the gaming space. I'm going to be overweighted in games. I was overweighted in the gaming space in November and part of December. Well, actually, I would say for November, Bitcoin was coming down from, I think it peaked on November 7th, and then Bitcoin was going lower and lower. My account was going higher and higher. Why? Because I was completely exposed to metaversal stocks, and they were bucking the trend. However, the only problem with all crypto is that if Bitcoin goes down, if it gets yanked down low enough, and we saw that on December 4th when there was a big liquidation from overexposed, overleveraged futures traders on the long side of Bitcoin. Well, that was your sell signal, because it ripped a hole through everything. There were no survivors on December 4th, but that's your sell signal. And if you had played these right, you're still in profit because you had bought in November. And some of these things, they were up. They could easily be up 50 to 100%. And then one day, okay, they get yanked down 20%, whatever. You're still in profit, but you go to cash, and then you wait it out. And since then, I mean, Bitcoin, of course, has gone even lower. And it looks to me like we're in a proper downtrend in Bitcoin. And again, my analysis is looking for windows of opportunity. They don't. I'll give you an example. In a year like 2018, on the long side, not short side, long side purely, you had one window of opportunity that was very profitable. In 2014, same thing, one window of opportunity. These were the worst bear markets in crypto history, but you still had long side opportunity. Now, in a year like last year, 2021, that was very up and down. And a lot of people did not do well, even though, and Bitcoin itself actually was pretty flat for the year. In fact, the other day, it was actually flat. It reached the price point of
the beginning of the previous year, yeah.
Yeah, and so Bitcoin, but despite that, 2021 had 4 windows of opportunity that were profitable. So 2021 could have been an immensely profitable year, because when I say window of opportunity, I mean in terms of the way I gauge things. I don't day trade. I don't swing trade. I'm looking for a window that's going to be open for a few weeks or more. So all windows of opportunity tend to be on that level. When the crypto market, it's like waves. People who surf often you can use the analogy to trading. You're looking for the bigger waves, not the little ones, certainly not the riptides. And when you get the big waves, you surf them to the best of your ability by picking the leading names, and you will invariably come out way ahead. It's shocking how, if you just trade during those big waves, your account can compound to ludicrously high levels. Right. I mean, it's no different than stocks. Stocks are much lower. Stocks are not rocket fuel, but you can still do triple-digit returns year after year, as I proved through my audit, because I was catching the right waves in the stock market and staying out when the markets were poor. And with crypto, the price action is compressed. Everything happens at a much faster pace. So, and crypto 24/7. So you really have to have your eye on the ball to basically have your ideal entry points and exit points. You can't just leave it alone.
Right.
With stocks, it doesn't trade on the weekends, and it only trades 6.5 hours a day in the U.S. exchange. With crypto, you have 24/7 trading, but that's to an advantage actually, because you don't have gap up, gap down risk in cryptos, as opposed to stocks. With stocks, you can be in a biotech stock that loses 90% of its value overnight.
Absolutely.
And that's a big win in terms of risk for crypto.
Yeah. You hit on a lot of good things there, Chris, that I wanted to build on a little bit. The first one was around the metaverse. And I think you mentioned a really good point, which is that when you were younger, I think that the term the metaverse is so broad, but really the metaverse is a combination of so many different events. Social media, I would consider, as a part of it, gaming, all these things. And then what you really start to see is a culmination of a lot of things coming together. This concept of play to earn. World of Warcraft and RuneScape have had in-game markets for years. And outside of that as well, they've had in-game currencies that people literally, as you mentioned, they'd spend their days starting to kind of farm for these currencies. I think even Brock Pierce Two random people, I think it was Brock Pearson, even they had Steve Bannon, were invested in companies that were doing this like years ago. And now we're starting to see that materialize as play to earn on a much larger scale across the entire Philippines. You also have, again, Second Life and all these games that we mentioned earlier that people would invest tons of time into, now becoming much more mainstream, more understandable. You've got the hardware devices, a VR headset starting to get much more affordable, much more scalable. It seems like a culmination of a lot of things coming together. And on the point you mentioned earlier on about Bitcoin, I can definitely see I think the biggest point you brought up, Chris, which is so true, is that people should understand these few windows of opportunity that really make assets perform the way they do is mainly driven by whether or not players like the Federal Reserve, the federal government, whoever these players might be in whatever currency you're pretty much resonating with well, depends on surges and contractions of liquidity, right? Or just a lack thereof of liquidity that can usually lead to bear markets because more money in the system will flood to assets and lead to these opportunities like we saw in 2019 through 2020 and 2021 with the pandemic that we had. It just was a really interesting macro event that set up the stage for crypto to move higher. I wanted to share one thing to close off here real quick, and then I want to ask you one last question, Chris, which is the one thing I was going to say to the point you brought up earlier about kind of your prediction for Bitcoin. Just to share my thoughts on it right now, I'm sensing that we've got potentially one last chance on your topic earlier about Jay Powell, maybe having one last chance to kind of play into the Fed temper tantrum, basically that they might take one more last move. They'll push off the tapering a little bit longer. And that would leave us around the 35K range for Bitcoin, potentially setting in a consistent low with what we saw back during May and July. And that might be the last opportunity. I really think it's the last one we have to see whether or not this is a bull or bear market. And it is going to depend on what the Fed does. If they stick to their word and pull a Paul Volcker move, where they really start to put a harsh stamp on things, hiking interest rates, cutting down on quantitative easing, if Jay speaks to his word, then that is going to spell bad for Bitcoin, for crypto, for the equities markets for sure. So that's my current thinking on things. But I think for the kind of the everyday person listening in, I'm really curious to ask you more of a personal question, Chris, because we dove really deep.
Before you ask that,
yeah.
I just want to one real quick comment is that Powell never sticks to his word.
Exactly.
He always has to walk that tightrope. He has a tough job because he has to use exactly the right words, kind of like Greenspan used to do in expert fashion. Right. He has to use measured words to keep both sides happy because he doesn't want to rock the boat. And keep in mind that these guys, the Fed officials and these top guns in government, they get the benefit of insider knowledge, which is not allowed to the average person. But there's a reason why Nancy Pelosi is worth $500 million and some of these others. I mean, it's insane what their net worth is. Powell is not going to induce a market crash. That is the last thing he wants. He holds stocks. All of his buddies hold stocks. They hold real estate. They don't want to create the mother of all recessions because that is exactly what would happen if he tried to pull a Volcker. If he tried to raise rates by any material amount, let's say we get another 7 hikes, or let's say make it easy, 8 hikes of 25 basis points so that, the Fed funds rate is at 2%. I think markets will already have crashed more than 50% by that point. He won't get there, and he won't keep doing it because they're going to have his head. They will literally, he'll end up with a bullet in his head. It's not going to happen. He's human. Everyone's human. And these guys are, as the Fed has to be an independent body, but they're not. Everyone's human being. And he wants to make sure that this punch bowl continues in full form. The party can't end. It can't end. And that does lead me to, I have a regular column on London City AM. It's called in the Metaverse with Dr. Chris Kacher. And in one of the recent articles, I talked about 3 scenarios that can play out depending on what the Fed does. If they do the hard line, hawkish stance, well, then we have the mother of all bear markets. That's not going to happen. If he plays it like he has been, and we continue to get more and more debt, then ultimately Bitcoin becomes more and more valuable, and it becomes the one vehicle actually that outpaces everything in terms of appreciation. And then it starts to become more of the world's reserve currency. It starts to displace potentially the dollar, or I would say, let's say there will be currencies that are weaker that will get Bitcoinized, like we saw in El Salvador. or dollarized, like we've seen in some South American countries. And then, of course, there's the Chinese digital yuan. And so maybe in 5 years, we have those three currencies that are still standing. And they're all, each of them can coexist in their own way. But rest assured, 5 years, let's say 10 years, 5 to 10 years from now, in that scenario, Bitcoin will be worth millions of dollars. I don't see how it can't be.
Very interesting.
And by the way, in 2013, I made a prediction that Bitcoin would go to 10,000 when Bitcoin was still like around $20, and everyone thought I was nuts. And they said, "Who is this kid? you got to be crazy."
The only difference you have between them, Chris, is the perspective to think really like 5-10 years out. I mean, if we look back 5-10 years, then it starts to become apparent, especially now that we've had the fortunate ability to see what Bitcoin can do. And now I think we've still got that ability to now look forward 5-10 years. And honestly, it's not crazy to think because, as you mentioned, if the Fed loses their holding on the current situation, if they keep, again, kind of kicking the can down the road as they have, you don't want to go against the Fed. But eventually it's going to get to that breaking point, as you mentioned, when inflation does spiral out of control, when trust in the base currency goes under. And that's when, again, really the hypothetical Bitcoin $1 million and above really can materialize quite easily. Same as equities and housing prices would do the same. And you saw, I think a good example to close off on is in Venezuela. You saw this. You saw the currency devaluing, but the stock market was rallying to new highs, vertically. And it's because people are rushing to assets that have some kind of bearing to real value. But I wanted to close things off, Chris, because I think there's a really important question I want to ask. And I think it's one for people who are getting into finance in general. I know I've gotten it asked before. I mean, you really do have a really great legacy behind you in the sense of your trading history, your convictions on investing. I really applaud you for that. But
Hold on 1 second. Your mic is off.
Yeah,
sorry, you're back on.
Sorry, guys. Yeah, sorry, I was getting a Telegram call. My bad. Sorry about that. All right, we'll kick off from the last point. My question to you, Chris, is what really got you into finance and investing? Because one thing that I think people don't know about you is you're a very multi-talented person. You're into piano. You've got all kinds of friends across the world. You've traveled to so many different places. What led you into like the rabbit hole of finance and crypto and equity trading?
Well, I think it's on my mother's side. It's part of her family's DNA. I love, for whatever reason, I'm constantly curious about what makes prices move of assets. I don't know why. When I was a kid, when I was 7 years old, I was collecting stamps, not because others were collecting them, but because I was actually charting the prices of stamps. And this was in the inflation days when stamps were actually going up quite a bit every year. So I got Scott catalogs and actually tracked the prices of stamps so that by the time I was 9, I was actually making money by buying the right stamps, and then you could resell them at the shows for a profit. You could do this with mint stamps. Certain stamps would actually have a much better chance of going up in value. Sometimes they would double, like the Olympic stamps, things like that. You just had to have a sense of it. So that I think that's where I kind of got my taste for what makes us why are prices moving like they're moving. And then I bought my first stock. It was Apple Computer when I was 11 years old. I didn't keep it, but I was into stocks as a teenager. I was surrounded by Wall Street Journal, Barron's, all these investment publications that would come to the house because my mom was one of the top brokers and analysts for Merrill Lynch at the time. So I was surrounded in the environment. And I think that I've always enjoyed investing because to me, it's the greatest psychological and analytical puzzle there is. It keeps my interest compared to, say, something like nuclear physics, which is really dry. It's a fascinating field. I enjoyed it. I was good at it. But it's really too dry. There's no psychological component to it. And what drives my interest is both the analytical and psychological components.
Well, Chris, I mean it as an absolute compliment knowing you over the past few years. If I were to meet you firsthand, I wouldn't think you'd be the investor you are here today. And it's incredible to showcase that the skills you've learned over the past couple of years, you've put into this focus of understanding the markets and the psychology. It proves, really anyone can get into finance. And it's people who resonate again with those key principles of getting into understanding the psychological aspects of things. So, Chris, thank you so much, man, for, as always, making the time. It's so nice to get to catch up. And pick your brain, because I think we end up, as we usually chat and stuff, we usually go on for hours and hours, and it's sometimes someone's got to put the brakes on us because we can just keep going on. But man, it's so nice to get to see you. I hope you're doing well and staying healthy, and just wanted to say thank you again for making the time.
Thanks so much, Nick. It's always a pleasure, and yes, I love our conversations. Yeah, can't. At some point, I think as the weather's warming up, you and your girlfriend should make a trip out of Tallinn or to Tallinn here, or
Yeah,
I'll find a way to because it is one of my favorite cities.
very cool. Awesome, Chris. No, thanks for coming on, man. And I was just going to ask you, Gene, did we want to ask any questions or?
Yeah, I was thinking, Dr. Kacher, if you have time, would you have
Sure.
10 minutes to go through
Yeah,
some questions?
absolutely.
All right, everyone. So if you have a question for Dr. Kacher or for Nick, feel free to click the bottom left side of your screen and request the mic. Our moderator, Hope, will be writing down who has requested the mic first and which order. So feel free to do that. I'm sure both of them would be very happy to answer any questions you have. Very good investors.
I would say while you're waiting on the first question, I would say that people who want to learn how to trade and invest, they should read first and foremost William O'Neill's How to Make Money in Stocks. That's an investment classic. Also, the Jack Schwager books, Market Wizards, of which William O'Neill is actually interviewed in that book, as well as our first book for Wiley and Sons, which went bestseller, and it's called How We Made 18,000% in the Stock Market. And I think that will arm the average person with enough knowledge that they can start creating their own strategies and testing them in real time under fire with their own money. And I mean, the thing about trading is if you do it just for the money, you're probably going to lose because your emotions are too engaged. And that is the paradox of trading, is that you should really be doing it for the fun, the game. In other words, if you lose or you win, it should not affect your emotions so greatly, because that's where all the FUD and the FOMO come in. This is why people buy at the top and sell at the bottom. And we see this repeatedly in crypto. We see it in stocks as well. I think the average, in stock options, 90% of people lose over the cycles. And in crypto, I think it's even worse. I heard it as high as 95% of people lose over entire cycles. That is bull and bear cycles. That would be a good example. Would be 2017 to 2018. Those 2 years. By the end of 2018, the vast majority of people had actually lost what they'd made in 2017. And we've seen this with .coms too. In 1999, everyone was making tons of money and quitting their jobs and starting up, hedge funds. And by 2002, every single one of those people that I knew had closed their shop, gone back to normal. I mean, they were lucky if they broke even. If they had broken even, a lot of them went bankrupt because the next 3 years, from 2000 to 2002, were absolutely brutal, where the NASDAQ lost 87% of its value.
Thanks, Dr. Kacher. We have a bunch of people. I'll let Hope introduce them.
Awesome. Yeah. So our first person that requested the mic, we're having a little bit difficulties connecting, so we'll keep working on that. Let me see who's next then. So Crypto Crank, you are the first person who has speaker permissions who has requested the mic. So go on ahead and ask your question.
Hey guys, I'm just curious. What tools do you guys utilize to make that decision other than standard TA? So like you're saying that you think Bitcoin hit a top or something along that line on this market. What are you using to kind of gauge yourself off of that?
Okay, well, as far as major tops, and I don't see us as necessarily being a major top yet. I don't have enough data. I'll know if say Bitcoin starts to break below 30,000, 28,000, then we're pretty much in a bear market by that point, by definition. And I think the only thing that can reverse Bitcoin going even lower in price is for Jay Powell to step in and cry uncle and say, you know what, we're going to start printing money again because we have no choice. I'm waiting for that signal. That's going to be a very key macro signal. The metrics right now, they're still looking great. There's a lot of coins being moved off exchanges into cold wallets. However, keep in mind that a lot of those coins that are being moved off exchanges from spot exchanges are going into the futures market, which creates a lot more volatility. And there's been so many people trying to catch the falling knife. The lower Bitcoin goes in the last few weeks, that we've had billions of dollars liquidated on the futures side. Keep that in mind. So a lot of people who say, yeah, Bitcoin's so bullish, the supply is shrinking. Well, that's partly true, but not fully true, because they're not taking into account the billions of dollars of Bitcoin that are sitting on futures markets being actively traded.
That's a big thing. I was going to say to that point, Chris, like, because constantly people always tell me about the exchange reserves metric you can get on like a lot of major platforms like Glassnode and stuff, and it includes a lot of the platforms. But the problem is it's including their spot balance sheet. It's not including like the futures, and also they don't include some major derivatives platforms like Bybit and a couple others that have really, like, again, as you mentioned, these are just casinos for everyday people. They're really extracting liquidity and value from people, and it's completely distorted the actual spot market where price is discovered. So when you're, for example, in DigiFox, if you're getting paid in crypto, if you're going on Coinbase and buying crypto, buying it through Robinhood, no matter where you're buying it, you're usually buying spot Bitcoin, right? Physical, in a sense, kind of what would be defined as if you were actually owned physical gold or silver. Whereas now, just like the gold and silver markets, you've gotten flooded with paper derivatives, these futures contracts, different types of financial products that don't have the Bitcoin backing, like the future settled Bitcoin ETF. There's all of these big problems that are still holding us back. And until those get sorted out, until people stop using these kind of derivative-based market platforms and go back into spot buying, we're never going to have that consistent parabolic run-up like we had in 2017. I think you even hit on that, Chris. Like, the difference, it's changed from 2014. Now you can short the market. You can go play in these markets with 2, 5, 10, 20x leverage. And unless you know how to use that leverage as a tool, you end up just getting crushed in the end.
And what's nice to see that despite that, because 2021 was the year of liquidations, forced liquidations due to all over-leveraged futures accounts. And despite even with that, taking that into account, there were still windows of opportunity that did stay open for a number of weeks where massive amounts could be made. And back to the listener's question is that, I mean, I'm using a combination of, first of all, I'm tracking what the top performers are doing in crypto. It's just like I do with stocks. I'm always looking at the top performers because that's kind of my guide on how healthy the market is. Because if the leading cryptos are getting taken down, well, that's not a healthy market. And this happens over a period of not a few days. We're talking a period of weeks. It's a trend that sets in. And right now we're seeing a downtrended Bitcoin. We're seeing a lot of leading cryptos having trouble. We see there's a handful, there's maybe 3 or 4 cryptos out there like Luna and Matic, and they're trying to buck the trend. They're trying to go higher. But that doesn't make a bull market. I need to see more evidence of more of these high quality names starting to really undergo upside moves. Until I see that, I'm going to stick to, well, the major overriding signal is that Bitcoin is in a downtrend on a daily, and with the headwind of Jay Powell tapering and then eventually hiking, I'm not expecting a major buy signal in crypto for perhaps a number of weeks, and maybe it takes longer. It really, I think, all depends on how Powell, how long it takes Powell to cry uncle, and that is dependent on the NASDAQ composite and the S&P 500. Those are kind of the two benchmarks I think he uses, because in the last 10 years, whenever those averages corrected to around 20%, that's when he would step in and calm the markets.
Awesome. Thank you.
Good old J Pal, huh?
Yeah.
Thank you, guys. I appreciate it.
Absolutely,
Pleasure.
man.
Awesome. Just wanted to quick say, we did a really great job of this in the last bit here, but if you are not speaking, if you've asked a question and you're not speaking, or either Nicholas or Dr. Kacher, if you guys are not speaking, just keep your mics off so that we have the best audio quality for this recording, because we're going to be doing a podcast for this later. This is going to be uploaded to our podcast. So Dr. Chad has requested the mic, and he is up next.
Hey, well, I appreciate it. Well, thanks for calling me doctor, but I am not. It's Mr. Chad. I appreciate it. Hey, Nick and Chris, man, great conversation. Much appreciated, man. Learned and continue to learn, man. Nick, wanted to throw out that I ran into you in 2017 online, man. You've been a great level-headed voice in this space, and thank you much, man. My question is to Dr. Kacher about the macro thinking when it comes to crypto, man. I've tried trading, a couple good trades I've noticed did well, but then did not very fast because of my macro thinking. And so, therefore, what I'm saying is that I found it better for myself as an emotional trader to not do that, to go on the macro end of trading. Waves, I like your waves analogy. And therefore, what I guess I'm asking is that you're talking about the metaverse NFTs being pretty big soon. You see a downturn in Bitcoin right now, which I do as well. I guess my question is for someone like myself, like a macro trader that does not swing in and out of positions very fast. Because I don't want to miss when I saw a blow off top in 2017. I see Bitcoin going higher like you guys do. I don't want to miss that. How would you, for a person of my, what I've already told you, how would you say to continue trading or, if it's been good?
Well, I personally am looking at the performance of the leading names as kind of my guide. These are the names that well outperform Bitcoin when the window of opportunity opens. Mm-hmm. And so I'm not seeing evidence yet, but that can change. Let's say we start seeing the start of some high quality names starting to break out, or starting to uptrends. And the more that happens, the more interested I get in either buying those names or, obviously, Bitcoin itself in that situation will probably get closer to a major buy signal. And I don't necessarily have to start buying on a Bitcoin buy signal. I can start buying beforehand if there are some names that legitimize it, especially if it's in a like I did in November. I was heavily exposed to gaming names, and those were going up even though Bitcoin was going down. So nothing wrong with doing that, but you have to make sure that the market's on your side in that sense. At least having one major industry group showing signs of life, or let's say signs of outperformance, not signs of life, signs of outperformance, and then you're buying the best ones. But then you have to also be quick to reverse your position because, December 4th was a bloodbath. Right. And there were actually some sell signals that I got a few days beforehand in certain gaming coins that I owned. And then the ones that I didn't sell and waited till the December 4th, well, obviously they got taken down a lot further. But on balance, I was still up because I bought these when they were, it was earlier November, and a lot of these good names, it's no stranger for them to go up, 50%, 80%, whatever, in a matter of a few weeks. Mm-hmm. So you can play it that way. But yeah, the macro is much more of a long-term approach, and I'm marrying macro with metrics and with top performing, the price volume action of top performing coins.
Excellent. Very nice, man. Appreciate the answer, and again, appreciate the conversation, man. This is great.
Well, thank you too. Thank you for your question.
Absolutely, man.
Right on.
Thanks for coming on.
Awesome. Thank you. So unfortunately, we are having some Twitter tech difficulties where I'm not able to approve people for being able to speak. Like, hit the button and it doesn't work. So we are probably going to have to end the questions here. Do either Dr. Kacher or Nick, do you guys have anything else you guys want to end on?
I'll just say before Nick wraps the whole thing up that we are doing great things in Estonia. It's a great environment for launching blockchain technologies. Our company, TriQuantum Technologies, of which Hansacoin was the early embryonic form of that, we're going to launch in the next quarter. And alongside that is the Quantum Poodle Crypto Fund, which I'm going to be managing. Really, it's a Quantum Poodle fund. They don't like the word crypto. And crypto is a misnomer anyway. It's really blockchain. It's really digital assets. But I'll be managing a digital assets fund once we're fully regulated. So we're all looking forward to that. Then I can actually be in competition with the rest of the crypto space in terms of all the hedge funds that exist out there. I think there's something like 1,100 crypto funds out there now. So that should be a lot of fun.
All I can say to that is I can't wait to see, Chris, when you get to the top leaderboards and stuff and performance, and give some of the other funds a run for their money. And no, I just want to thank you again, Chris, for coming on. As always, it's nice to have you. And if you guys happen to join into the space here a little bit later on and miss some of the conversation, we're going to have it uploaded on our YouTube channel in the coming days. So if you liked what you heard so far, you guys are welcome to check that out. Go ahead and subscribe to our YouTube channel. And also as well, if you aren't already following us here on Twitter, it's a good thing to do as well, so you guys can hear about all the new spaces that we'll be dropping. So yeah, no, Chris, thank you again for making the time. It was great to have you.
Thank you, Nick. It's been great, as always.
Awesome. Thank you guys so much for being here. If anybody has any future guest suggestions, please DM us. Eugene, who's our marketing expert, will keep track of all those requests so that we can see if we can get some more cool people on here. Any other questions that you didn't get to ask because of the tech issues, feel free to message us on our client support chat, so our intercom chat, either on our website at digibox.finance or in the app in the contact us section. You can contact us on intercom and just ask any questions you want, and we'll pass those over to Eugene as well, so we can keep track of the different topics that we might want to cover in future events. Really sorry again to everybody who tried to talk and couldn't. I tried really hard to get it to work. Thanks again to Dr. Kacher and Nick for being here. Always a pleasure to have really cool people on here like you guys. And yeah, we'll see you all next week. Unless Eugene had anything else you wanted to add.
Nope, that was great. Thanks, Hope. Thanks, everyone.
Thanks, guys. Thanks
Thank
for
you.
appreciate it.
Take care, guys.